Okay, everyone. I took one trade today on Amazon, and I made P&L was $2,856 on the trade. So it's a profitable trade. I'm grateful to have a profitable trade, but this was not an easy trade, in my opinion. So let's go through it. So this is Amazon on the 1 minute chart, and so I took the trade on this bar right here. This one, I opened the trade. And I didn't know, of course, if it was going to keep going or if it was going to pull back again. Quite often it pulls back. So I was expecting that. So sure enough, it popped up over previous day high. This green line is previous day high. And then it started coming back down. And so quite often when it does a marginal new high, it's going to come down and make a marginal new low. That's what it did. This is also an example of a look above and fail. And so when look above and fail, it goes to the opposite side of range. I wouldn't have been surprised if this came all the way down here, because quite often this gray bar this gray area, by the way, is the closing range of Friday, which I think that is the most important thing on the chart, frankly, is the closing range of the previous day. So I put more confidence in the closing range of the previous day than I do in the previous day high and previous day low, because there's a huge amount of volume on the close. Now, many times the close overlaps the previous day high or it overlaps the previous day low, because candles quite often close at the top or the bottom of the range. But nevertheless, they don't always, and they didn't in the case of Friday. And I think that's just a very important support and or resistance, depending on whether or not you're above it or below it. So in this case, we're above it. Look above and fail. I wouldn't have been surprised if it came all the way back down here, which I didn't want. But anyway, so I scaled in through here. I'll show you all my executions. And then it started to come back around and I started scaling out, and you'll see that there was nothing impulsive about this price action. So there's, these little white dots are fair value gaps. And when you have an impulsive move, you'll see like significant fair value gaps. That's the sign of an impulsive move. And this just didn't have it. It was just grinding price action the whole time. And it got worse as it got close to the end here. And so I actually got out on this red candle right here. And then, of course, just Murphy's Law, it pops up right after that. I was waiting for this 200% extension. So quite often when you see a morning high and then it comes down and makes a low and starts advancing back up again, you can do a Fibonacci extension on that. And the 150, so the 50% extension is very important. And the 200, the 100% extension, which is 200 of the total range, is also very important. So I was holding out for the 200. You'll see that the 150 did hold resistance here, and then it pulled back for about 10 or 12 minutes before it came back. It kind of fought with it along here for about 20, 25 minutes. So again, these are important levels. I'll show you my executions. So I scaled out along the way. I'm proud of what I did. I scaled out progressively at higher and higher levels. So I made a decent profit, but this could have been a much better trade if it happened quicker, if it was more impulsive. And if it was more impulsive, then I would have felt more comfortable taking a second trade, which normally I take 2 or 3 trades in a day. But this one just took so long to play out that I felt like I couldn't. So in any case, let me show you again. This is the P&L, 2,856. So I'm grateful for that trade. Here are my fills. So you can see at the beginning of the day, my first entry was $1.33. And then I scaled in. Look at this. I mean, $1.24, $1.12, $1.96, 84, 84. I scaled out a couple here, and then I bought back in because it came back down. And my lowest entry here was at 64 cents, which is less than half of my opening purchase. So, you get an idea when you're doing that, you're in a significant losing position at that point. And this happens to me almost every day. I do have a fair amount of confidence in the way these trades play out. So I'm okay with it, but it's scary and it's dangerous. So I don't necessarily advocate for doing this approach of scaling in. But my feeling is if you're above the closing range of yesterday And if you're above the VWAP, and if you're above what I call the magic line, which I'll show you that really quickly, is this beige line here, then I feel comfortable scaling in. Now, of course, in this area right here, it went below the magic line and it went below the VWAP, these yellow dots, that's the VWAP. So it came back down. Now, I felt comfortable in the trade because of this morning action. This is all supportive. So I knew it was going to do that. But generally speaking, I like to be above those three things. So this is the closing range of yesterday, the VWAP, and the magic line. So in any case, started scaling out here. And at the beginning, you'll see I scaled out, these first 1, 2, 3, 4, 5 exits were all 2 contracts each. And that's because I was in a losing position earlier. I wanted to make sure that I wasn't going to lose money on the trade. So I scaled out pretty aggressively here just to get a little bit of profit. And then after that, I scaled out 1 each time. And you'll see that I just progressively got higher and higher fills, which was nice. The highest fill I got was $2.60. But then, like I said, here at the end, where the price action started to fail right here, I got out because I just felt like this didn't look healthy anymore. Now, it looks like it could, in fact, go and hit that 200. This red bar here on very high volume, see this volume bar right here? Let's just zoom in on that. So this is a high volume red bar. This is a big, scary bar. So if I was still in at this point, which I wasn't, but if I was still in at this point, I probably would have gotten out of the remainder of my position here anyway, because I feel like this is going to be resistance, certainly at the top of that bar. Might not even get there, and it could just collapse. But on the other hand, it is still above the magic line. It's above the VWAP, so it is possible, excuse me, that this thing could turn around and keep going higher. So anyway, that's the life of a trader. I'm happy I got a profitable trade. Thanks for watching the video, and we'll see you again tomorrow. Bye-bye.